pal.
Hey there, this is Pete Townsend from Entrepreneurial Ventures, and welcome to Money Never Sleeps, a podcast that looks inside the head of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This week, we talk to David Soden, co-founder and CEO of Aptimyz, an Irish tech startup delivering a complete and affordable electronic point of sale, or EPOS, and back-office management solution providing stability for retail in challenging times. If David and I had recorded this right after we met in February, I'm sure the conversation would have been much different. That's what made this interview so interesting for me to do. When you build some hard-fought traction with your startup, climb right up to the edge of hitting the market in a big way, but then the unthinkable happens to not only your target market, but the entire world around you. Yeah, that's pretty much a masterclass in dealing with adversity that you can't get in any business school on earth. So let's just jump right into it with David Soden on this week's episode of Money Never Sleeps.
Money never sleeps, pal.
Here we go again, recording from the home studio with David Soden, co-founder and CEO of Aptimyz. Before founding Aptimyz, David had a 13 to 14-year stretch in pharmaceuticals before stepping into some entrepreneurial ventures about 5 years ago, which have become Aptimyz. With that backdrop, welcome to the show, David.
Thanks, Pete. Thanks for having me.
Great to have you here. Listen, I've been really wanting to have this chat since we met that day in Coffee Angel on Pembroke Street in Dublin. And, but a little thing called the global pandemic is it caused us to shift gears a bit. Obviously, how we record these podcasts now being fully remote. And I'm glad we reconnected recently to kind of have this discussion.
Yeah, Pete, it was great to meet you that day. And I've been following the podcast ever since. So I'm delighted to be here.
Awesome. Well, let's jump right into it. Maybe just for the listeners' sake, because, I kind of know where you came from now. But for the listeners, can you share your backstory and how you got to this point?
Yeah, sure. I suppose, getting into the world of SaaS and what we're doing today, it goes right back, I suppose, as a kid. I grew up playing sports and, playing team games, but I love to win. And, I also loved making things, being involved in projects. And I suppose, I grew up in an entrepreneurial house as well. So my parents worked for themselves. And being the second youngest of 5 sons, I watched my older brothers set up their own ventures too. It never looked easy, but it was always exciting. So, I think I kind of had a bug from that point. And I suppose for doing and what I've seen and what I've come through to now, I think importantly, it's never been about working for myself. It's about being involved in something that was meaningful, a project that you could, make a meaningful change in an area that you're working in. So working for someone and working for yourself, it's always important that you kind of have a North Star for yourself, that you know why you're doing it and you mm-hmm. enjoy doing it. So I studied electronics in college, and then, as you said, I moved into the pharmaceutical industry, where I worked in the sales and marketing side of things for a number of years. And it was really the marketing side of it that was a real eye-opener for me. I was involved in a huge product launch back in 2009, 10 on to 11 and 12, but it was a massive product, and I was working with the team here in Ireland and the UK. So you're kind of working across functional teams, and there was just brilliant people involved in the project. And then there was also involvement with the corporate side of it. So the product went from 0 to 1.5 billion in turnover in 18 months. So, from that side of it, it was amazing as a young guy to be involved in a project with that kind of scale and to see, pre-launch activity through to launch activity to hypergrowth. And that was awesome. That was just, to see that happening and unveil in front of you, to be involved in that it was brilliant. And I suppose it wasn't easy, but, there was fires burning everywhere, even in big orgs like that. The challenges, as I said, this was through 2009 mm-hmm. to 11, really. And pricing would have been a huge issue at that point. So, trying to negotiate pricing, supply chain based on demand, all of this stuff, it was just a real challenge, but it was exciting. It was, and again, as I said, you work in great teams, from the sales, the medical side of things. We had a great partnership with everybody. And that's, I suppose, at the end of the day, we felt like we had huge success with it. So it was great. It was really enjoyable. So then I started out looking at doing something for myself in 2016, and I moved into the entrepreneurial space, as you said. And then I spent time in the startup space initially, just kind of getting a feel for it, looking at different projects, looking at different ideas. we eventually settled around start to 17 with Aptimyz, and that's really where the beginning of the journey started for me with Aptimyz.
Really interesting. You talked about the North Star a couple of minutes ago, and the way that being involved in a massive product launch where within 12 months you scale up to $1.5 billion of revenue. That's pretty intense. How did that experience form your North Star, or perhaps impact that North Star?
I think to be a part of something that's successful and scales like that, it's not about being an individual in the team. It's about being part of a bigger team and, having the right people around you. It's funny, I've spoken in the course of this journey over the last couple of years, and especially even this year, we've had a lot of good chats with some really good people. I spoke with the former CFO of Revolut, and one of his key advice was, make sure you have the right team. Make sure you have a strong team around you, because he said from his experience, team is critical for that kind of success. And I was able to, I suppose, connect with that because I worked with a very strong team in my previous career in the pharmaceutical industry. There was generally a strong team across the board. And that for me was the key. You have a good product, but good products don't sell themselves. You need to have the right strategy. You need to believe in the people that are doing their other jobs. You can't micromanage. You have to be able to work alongside people and let them do their thing and let them do it to the abilities they have. And that for me I think it was a key learning going into this. So, for me setting up Aptimyz, there was myself and my co-founder, Robin. I'm the business side of it and he's the development side of it. And, we talk, we bash heads, but we always come to an agreement in terms of what to do next. And we always keep the customer at the forefront of what we're trying to do. I kind of have a mindset and a mantra that, it's not worrying about the money. It's worrying about making sure that you are relieving a pain point for a customer and making sure that you're making it better. Sometimes that pain point isn't always obvious. The customers don't sometimes see it. Like Henry Ford said, if you ask them what they want, they'll ask for faster horses. So having that, I think the North Star for me, it's about enjoying what you're doing as well. Like, it's not easy, as I said, you'd say that over and over. Startup, for those listening, if anyone's interested in doing a startup, it isn't easy. If it is easy, then there's a high chance you're fooling yourself that you got something, because if it's that easy, it's not worth doing. Yeah. So it's a case of, enjoy what you do, make sure what you're doing is meaningful. And
absolutely. Yeah. I saw a great quote recently, and I don't believe I had never seen it before. It was Winston Churchill saying the only place that success comes before work is in the dictionary.
Yeah.
You just imagine folks that are in the space that you're in, that you look at and you say, geez, they've been incredibly successful. Things have gone really well for them. But if you're to watch the actual, how it unfolded in the 5 to 10 years it took them to get to that point, it's a much different story, right?
Yeah.
So with Aptimyz specifically, tell us about Aptimyz, what it is and why you're doing this specifically.
I can give the usual spiel about Aptimyz. And
Please do.
We do, yeah. So Aptimyz is a cloud-based POS and ERP system. We have chosen to launch that on the Clover platform. And stepping back from what that is, what we believe is Aptimyz has unlocked the true value of POS. And it's by creating a data-driven, scalable software solution. And for more companies are turning to POS to solve their business needs with smart solutions. POS in itself is old, and I think there's a risk of being associated with a historic legacy product rather than actually what we're trying to deliver today. At the end of the day, Aptimyz enables businesses to get on with their business strategy while we take care of everything else. And how does that happen? And we built a software product that's easy to use, it's easy to get up and running, and it's also seriously cost effective for businesses to take on. So there's no upfront costs compared to traditional POS models where there's high upfront costs. It changes the options for merchants and retailers to go from a CapEx expenditure model to an operational expenditure model, which is it's in this day and age, especially now with COVID, that's, if they're looking to upgrade and they're looking to switch over to a better solution, it doesn't cost them, which is fantastic.
Very good. And for all of our listeners out there that may not be aware of what POS is.
Point of sale.
Exactly. And it really interesting context, again, going back to, when you and I first met just before lockdown, would have been in February. And we'll come back to that in a minute. But just kind of thinking about, your inspiration to do this after 13, 14 years in pharmaceuticals. Clearly heard the experience like we talked about of that product launch and you starting to think about these type of things, but it feels like a big shift, right? Away from pharmaceuticals and into point of sale technology, right? And everything around that. Can you talk about that for a minute?
Yeah, it's funny. It was more, Pete, it was a big jump to go from one to the other. But at the end of the day, it was like when I was doing my first forecast, you have to obviously build your 3-year plans. We were dealing with the local enterprise offices, Enterprise Ireland, and everyone's asking for your 3-year forecast. And at the end of the day, when I was building the software as a service business plan, what I was looking at was, you're like, what's your customer acquisition look like? What's your churn look like? It was exactly the same as what I built when I was in the pharmaceutical industry. Your
Okay.
customers are your patients. Your churn is the people who compliance issues or there's end of life. And it nearly replicated. I actually think I could have taken our existing model and just put in the products instead of and it was a switch. So the transition actually in the mechanics behind was very similar. In some shape or form, we had been dealing with retail with pharmacies. So I had an understanding of what was going on there. In terms of front of house as well. So, but I think there was a lot of learning. It was a great challenge and it was really exciting. But I also think that there was a benefit for us because, as we said, point of sale, tills, cash registers, it's old, it's a legacy. It hasn't changed. Like it changed from punch buttons to an electric till to, what we have today. And there hasn't been a massive transition in terms of how it works. I was on a call yesterday with an association here in Ireland who represents a large number of merchants. And he was saying, I remember when you're going to get your till and it costs 15,000 euros per till per site. And we're saying, well, ours is zero. We have an MRR. It's a monthly recurring subscription model. Yeah. And he was just like, that's brilliant. And that's a significant change. But then he started listing off, 4 and 5 other POS companies in that space with them. And in Ireland, look, we love our country, but we know it's a small market. So when you start to hear there's a list of people selling a product, then that price point is going to be high for a small market for volume. So we're coming in saying, well, actually, that's gone. Here's the new way of doing it. Everyone's talking about the new normal. Well, that's what we're aiming for with Aptimyz, is become the new normal in terms of pricing and service for merchants and retailers.
I get it. And what I'm hearing is kind of connecting all these dots back. We've got early training through your university degree in, electronic engineering. You had some good experience on the sales side in pharmaceuticals, right?
Yeah.
You had some product building experience there.
Yeah.
And with that technical mind, the sales mind, the product building mind, well, it could have been anything, right?
Yes.
It may not be futuristic augmented reality or virtual reality, but when you start thinking about software as a service, it kind of makes sense that, okay, if you identify a problem and say, listen, this is what we're going to dive into as a problem we want to solve for this customer group, we've got some good base skills of life experience to draw on here. That's what I'm kind of coming back to. Yeah.
Yeah, absolutely. And I remember listening to a podcast about 2 years ago, and it was Freakonomics with, Steve Dubner and Steve Levitt, and they were talking about the productivity paradox. And they talked about when electricity was first brought in and it replaced steam, there was no increase in productivity. And what they realized, it took about 20, 25 years for them to realize that what they had done was just replace the conduit pipes. They didn't actually move the machinery around to become more efficient to suit what the electricity could provide. So there is that. And then they said that there's a debate around whether the digital revolution is really increasing productivity. And they said, it's not about these gadgets and apps. It's about learning new ways to think about possibilities and new ways to think about the capacity for work. And I suppose when we look at what's just happened, so, you and I met in February, but, everybody didn't know what was going to happen to the world around March time. And then it started to kind of open up. We were all having these podcasts, we were having these Zoom calls, we were having Hangout meetings, and suddenly we were starting to leverage the capability of SaaS. We don't call it SaaS, we just call it, Zoom calls and podcasts, but we're leveraging technology to make the world more efficient. And it was forced upon us. And we hear e-commerce has jumped forward 4 to 5 years with retail because they've been forced to make that step into it because they need to get to where the customers are at the moment. And that's where the space we're in. And so, we always felt we were at the front of a wave of what's going to happen within retail, digitizing retail. And it's not just about having a till or a POS and then an online. It's about having a digital business that has a connection to the physical customer in store with, card present, and then having your connection to your customer online as well. But you can manage it in one place. So, and that's the efficiency that we're looking to deliver for retailers.
I get it. And I want to dig into that a little bit more. thinking about podcasts as well. Obviously, this is a podcast, and you've
Yeah.
talked about another one there, and we've got one of the ones I listened to probably about a month ago that got me thinking about you again was Anthony Pompliano had a guy on called Shamath Palihapitiya, CEO of Social Capital. He's also the chairman of Virgin Galactic. He's the owner of the Golden State Warriors NBA franchise. On this podcast, and this was at the height of the lockdown, he was referring to POS or POS as something else that is POS, right?
Yeah.
That I'm not going to repeat. And, he was basically talking through this framework that he uses called follow the money. And he says, listen, if you're looking at, say, a Macy's laying off a bunch of people, right, because they're going through financial difficulty, no one's going to Macy's to buy anything. And this was, again, back in April in the US. Then you've got to follow, okay, who are the suppliers of Macy's? Who are providing them with all the tools they need to be able to run their business? Obviously, if Macy's you'd expect would be expanding or doing things differently in new ways, they're going to be buying a whole bunch of stuff they need to support their new business. And he was kind of walking through and saying, what we think was big businesses need, or even businesses overall needed to help run their business, that has changed significantly, right? So it got me thinking about really this new world order and what felt like when we first met that, David, you have this dependence on this hardware driven hook really to unlock the true value of what the Aptimyz software product can do for retailers. But what it sounds like is that you've adapted significantly to that and are now responding to what's going on in the world pretty damn quickly. Yeah.
So what I haven't mentioned is Aptimyz's launch platform is Clover, and Clover is a cloud-based point of sale system that's owned by a company called Fiserv. Fiserv are enormous, and for those who don't know who Fiserv are, they process 1 in 3 of the world's credit card transactions. They're huge.
Okay.
Yeah. So Fiserv have subsidiaries all over the world. In Ireland, we know them as AIB Merchant Services, localized to the brand of AIB. And then in the UK, First Data Merchant Services, Lloyd's Cardnet, it just goes, and it goes on and on. EMS in Holland with ABN AMRO, Telecash in Germany. So, and that's when you start hearing the amount of subsidiaries, you realize that's how they have the volume. So, but we saw that as a phenomenal path because at the end of the day, Clover is an out of the box solution for food and beverage industry, and it's a phenomenal solution for that. They just don't have a retail solution on it that is from SME to mid-market to enterprise. So we saw that as the gap in their offering. We also saw they had an existing sales and distribution network through these subsidiaries. And for me, I suppose going back to that whole pre-launch phase for me with that product that we were involved with in pharma, I asked the question is, how do I take a product and scale it fast? And how do I keep it lean as possible? And for that, all those factors were in place with the Fiserv offering. So what does it mean for us? It means we get this huge opportunity to scale globally and quickly. And then what does it mean for Fiserv having this? Well, if you go back and you look at the press release in January 19, I believe, when Fiserv acquired First Data to take on Clover, they quote the rationale for buying Fiserv. They actually highlight the importance of Clover to this portfolio. So it's about value-added service for merchants with acquiring in the merchant acquiring business. Margins have been compressing for years, and it's now a time to add more to it and add value-added services. So this is what Clover is for these banks, and we just think fabulous. There's a mutual benefit for being on it, for us being on it, and for them to promote us. So that was our rationale for going in it. But at the end of the day, there's so much more because we're cloud based, because we have all this data. We have this huge opportunity to really deliver something special to merchants as well. So and help them grow better. So when it came to the change that happened with COVID, we didn't know. To be very honest, in March, I was unsure of how this was going to impact us. I'm not sure if everybody else had greater foresight than I did, but I think it was kind of like a hold your breath moment. And then once you realized that, yes, you could give up, or it was double down, that was the choice. And we doubled down. And we took on an extra couple of people throughout the shutdown. So we actually expanded the team. We took on John and Eugene, and great guys. And then Tracy joined the team in the UK. Paul Kelly joined the team. So we just had a fabulous experience in terms of people seeing what the vision was. They saw what we were doing, and we were able to expand. And it goes back to me, they were all hugely valuable for us because they all brought their own skill sets. They all brought, so we were able to deliver a fabulous product for the merchants now. And that includes now being able to integrate and seamlessly integrate their online presence with their in-store and manage the whole thing in that digital hub. So, so, and that's kind of, that's where we went. And now it's a case of people are looking to upgrade their systems. And that's where the opportunity is for us, is because we're going in, and it's very different, Pete, to go in and talk to someone and say, well, actually, this is what we do and it's fantastic. And then the question is, how much? You're like, well, there's no upfront cost. This is what it is per month. It could be 140 euros, including Clover, 150 euros, including all the hardware and our software a month, as opposed to, I have an example of a merchant who had a quote for 12,500 euros for one till for one site, and he had a 200 euro a month support fee on top of that. And then he went on to open 3 more stores with us on top of that. So he's 4 stores. So, we've saved him 50,000+ euros.
Yeah.
Which, he's a lot more things he can be doing with his money than spending it on old hardware.
Okay. So, and is this kind of a two-way street? Is that you guys are out there with retailers that are using Clover and pushing the product, but Fiserv are also promoting and pushing and saying to when they sell Clover to retailers?
So when they go and talk to the merchants that they sell acquiring to, they now have this opportunity to, because as I said, the reason Fiserv bought First Data was to have a value-added service for their merchant acquiring. Now they can target not just the food and beverage sector or QSR, FSR, or whatever way you want to call them. They can now open up all this other. So I think in the US, retail is worth 3.5 trillion per annum. Okay. It's something crazy. Of that, 20% is QSR, FSR, or food and beverage.
Yeah.
Say the other 40% is the general retail, which is what we service. So, your TAM, Samsung, all of that. It's suddenly we're opening up that market for them with this hardware that they're looking to promote with their sales teams. And I think in the US, just as an example, I think Frank Biziano, he's the new CEO of Fiserv, and he came out a couple of weeks ago saying that they now have up to 160 new banks looking to partner with them to sell Clover as a solution in the US.
Okay.
So this is and that's why we're excited, because this is it's a massive opportunity to tap into this very quickly.
And it makes a lot of sense because everybody's fingers crossed that pandemic is not a long-term thing, right? And that within a year to a year and a half, hopefully, there's enough medical advancement to be able to allow people to return in greater numbers to the high streets of the world, to the main streets of the world, and get into shops and support these small businesses rather than buying everything on Amazon, right?
Yes.
But from your perspective, what it sounds like is that there was always a problem there worth solving. And for those retailers that are running their businesses still and have started to come out of the other side of this, that problem is still there, and that problem still needs to be solved. And then for those that have shifted online, that you can help them too, right? It's a pretty good story.
It's really interesting because you're on the money. It's exactly what that is. It was a case of, it wasn't just moving slowly. The problem was just slow moving. COVID has expedited the problem. So for like Amazon, look at the increase in Amazon's turnover in the last 6 months. Like, it's just gone through the roof. It was happening anyway. They were growing slowly. I think when I was on a call there and I was listening to a guy talking about Amazon, and I think in e-commerce in the US, Amazon represents 60% of e-commerce in the US. It's much lower in Europe, but they expect it to grow to 60% in Europe as well. So, what does that mean for the local guys? There is also a case of misinformation. I strongly believe that the SME sector need to be educated more and supported more, especially at a kind of, a government level in terms of the educating on and how to set up and get online. A lot of retailers, they're great business people. They're very personal, and that's what they have. They have this personal approach that Amazon can never deliver. And it depends on the sector. I think 50% of what's sold on Amazon or online is electronics anyway. So the rest of the sectors out there, there is the ability to continue to deliver. I think you could argue the future of online is bricks and mortar. You could say that for retail, if they get the online right, they can continue to offer that same special offering in store and touch their customers the way they, differentiates themselves from the Amazons. There's certain convenience things with Amazon that you'll never win. So don't fight that battle. So, but in terms of clothing, it's the young people. Like I'm no longer young. So I've lost the fit physique that I used to have in my youth. So
same here, man. Same here.
Yeah. So, I'm tall, and buying clothes online is a nightmare. Sizes don't match. So I prefer to touch, feel, and try on. And there is a sense of that for a lot of retail, but that doesn't mean they shouldn't have an online presence. It shouldn't be connected to their customers. It should be done correctly. And there has been a case of, I've seen it with the local enterprise stuff. It's got the best intentions, but the outcome is that, they say, spend 5K and we'll give you 2.5 back. And that's like a great incentive to get a retailer online. But once they get online, which platform do they use? Which acquiring do they use? How do they get their stock online? How do they manage it? How do they get their photos? How? And these are people who are, it's a sector in retail is generally not a technical space. People, they're looking for IT support. They're looking for people to help them get up and running, get on their feet, and do it in a minimal way.
I'm with you.
And that really is that's something that needs to be addressed now, and that's hopefully what we're doing. Yeah,
it's great. No, I mean this conversation has really helped me to kind of see through to how you've actually managed to adjust and how you're doing this. Shifting gears a little bit, David.
Yeah.
Just thinking about our point of introduction, Ken Coyne. So shout out to Ken Coyne.
Yeah, great guy.
Who's an Irish guy and living in Warsaw and running his business there. And Ken was introduced to me, or he reached out to me after suggestion by Grace and Jero Sullivan, who are friends that go back to the Bermuda days. Grace was in Bermuda with me when I was there, and with a group of friends that have, all moved to Ireland since then. Great bunch of people. And if you think about your Irish network, you'll find pretty quickly that you've got close contacts that are now pretty far flung all over the world, or at the very least were far flung for a while before they came back home. Right. And all those people have made some great contacts and built businesses and done well, or perhaps not, and learned some lessons. I know you made obviously some excellent progress with global partners like Fiserv, Clover, to get Aptimyz going. Can you talk about how you leverage your network to do that?
Yeah, sure. I suppose for me with Aptimyz, like talking about leveraging, I started home. When you first started out, obviously I had the influence of my own parents, I suppose, watching them work and the connections that they had. And then I have an uncle who I was able to talk to. He's the former CEO of Bank of Ireland, so he had a lot of connections to be able to put me in touch. He introduced me to a friend of his who became a mentor. And then Matt is his name, a great guy, a very private man, but he's always challenged. He's always, pushed me to answer tough questions. The first question is sales. And this was when we were on our beta product. And, he's still like that today. He's opened up connections to me internationally as well. And, I suppose within the friends, so John and Eugene, as I said, came on in March. John and I went to school together. And John had gone off, as you said, he'd gone internationally and had dealt with property and retail and huge experience on the financial front. And I was able to ring him for advice, and we had a chat, and then there was a good fit, and he joined the team. So it's that sense. And the Irish network has always been brilliant. The likes of Ken and Trevor up in Poland, they've got ops talent. And to be able to reach out to those boys and say, this is what we're doing, they have the phenomenal business model themselves up there, which we're going to be leveraging ourselves. It's just fantastic, and I think they're going to be a huge success going forward. And then they've introduced their own network in the UK. They introduced two guys. There was a Keith O'Callaghan who works. He works over there. He's a hedge fund, and I've been blown away by the amount of time these guys just willingly give you, and always grateful, always thankful for someone's time like that. It's just it's a very powerful thing when you realize these are busy people who have they've got good jobs, they're working night and day. The spare time they have, they want to spend with their family, but they still make time for you to actually say, well, look, send me an email, I'll make an introduction. I think there was Ken has introduced me to a good few people like that. There was Kevin Deasy in Dublin with Accounting Pro, and just fantastically, just helpful people who are they're not trying to put their hand in your pocket. They're just saying, look, I understand. I started a business once. I understand where you're at. Let me try and see if I can introduce you to somebody. There's no expectation. And when you talk to someone, then it's just the network has been incredible in terms of just who you can speak to, who you can talk with, and it just goes like that. So if you get the opportunity to help somebody, what goes around comes around.
It does. And I was just having this conversation earlier today with someone who knows who she is about, and I was asking her for help with a connection to somebody. And, she's very helpful, very forthcoming, absolutely would do it right away. And I always feel I've got to do a quid pro quo, right?
Mm-hmm.
And think of something. And I genuinely had something in the back of my head that I thought would be helpful to her, that would be a natural offshoot of the project that I was working on. And she said, listen, Pete, don't worry about it. This is just, a favor for a friend. Do you ever get that kind of sneaking, I need to do something for this person coming up your back, right? When you're asking for help? Does that ever happen to you?
I think it's more the approach that you go into, because if I'm looking for help, and someone's willing to help, or they genuinely, you can tell. There's also people, Pete, like I've had my share of chancers as well that I've come across in this journey, and you start to become more aware of those the more you deal with them. I suppose, like when I met the mentor first, his history and his success is extraordinary. But what he said, because I was telling him about some of the incidents that we've come across, and he just said, software in the old days, back in this, the 70s and 80s, he said it was a gentleman's game. And he said there was handshake agreements, and if you shook hands on something, you delivered. And he said now there's a lot of snake oil salesmen, and we're seeing that. Like I've seen that in the time that I've spent. We're obviously building our product, we're growing, we're trying to grow as fast as we can. We're obviously looking for investment. We're talking to different people, and the amount of time wasters that you come across is phenomenal. But you start to get a sense for them. You start to see a pattern in terms of how they behave, and you learn how to avoid. So when somebody comes to you and says, "Look, can you help me with something?" you know whether it's genuine or not. And you should never go in to offer help with the expectation of having to get something out of it. But if you give someone help, then I always feel you can always ask for something down the road in terms of saying, listen, can you introduce me to such and such, or can you do such and such? But it's like, and if you can't, don't worry about it. There's no obligations. But I think in terms of leveraging your network, and the whole point of leveraging something, a lever is two sides. You're lifting something, or so if it goes both ways, they should be able to lift back. So and if you can help people, then it's not too time consuming for you. If you're up the walls, then you just have to let expectations be set at the start.
Absolutely. And just makes me think about someone that I'm working with right now, and where it is, you're helping me now because I'm flipping it around, David, is that I do get absolute joy from when I know that I've been helpful, and that's enough for me. Right. And that works. You just got to make sure you get the right balance of those types of experiences and those that put food on the table at the same time. Right. So
absolutely.
that's a big one. Thinking about these folks specifically that I'm referring to, I know that they have an investor pitch coming up with an angel group, and I'm helping them to prepare for that. I know that you've just recently pitched to that same group. Any lessons learned from that you'd be willing to share that you think might be helpful?
Yeah, I suppose, it was a very useful experience to pitch these guys. We had really positive feedback. We're still engaging with them. From my side of it, I look at it, it's what the challenge for me with all of this, Pete, was if we were sitting currently in Silicon Valley and we had what we have and we were looking to pitch, the question of valuation comes up. And your valuation in Silicon Valley is different to your valuation in Dublin. And the value of some high net worth putting in 700,000 versus putting in 200,000 in Dublin. We're dealing with people in London as well, and the valuation was probably, if not 2.5 times in London, what it is here in Ireland. So that's as the founder, like at the end of the day, I started off the podcast by talking about how you have to do something you love and you have to do all that. But at the end of the day, if you do have an exit, if you do, you want to know that you've done it for something. Like this has been a lot of stress. It's been hard work. I've had, I couldn't have done it without my wife. She's pushed and pushed and pushed, and made sure that everything has been going in the background without a hiccup. So if you're going to have an exit, you're doing it for the people around you as well. Mm-hmm. So you want to make sure you've got the right equity. And at the end of the day, that for me, it's all about your equity. So if you are given the opportunity to raise money in Ireland, then fine. And if that's what you have, then that's what it is, and you just go with that. But if you're raising it, if you can raise the same money at a better valuation for yourself, then you should always entertain that as a choice. But that was the one learning I found, that if somebody comes to you and says, well, we usually invest this much for this much of a percentage, and then they ask you what your valuation is, you're kind of saying, well, it's a triangle. You've kind of answered the valuation. It's like,
exactly.
Yeah,
that's what I was just going to say, is that when you're early stage, you get to a seed round, it's kind of like, okay, what is the size of the fund of the VC, right? Mm-hmm. Or what is the size of the pot that this investor has to invest with? What is the size of the check that they're comfortable writing for what you're going to deliver? And what is the percentage that they prefer to have, so that they don't get diluted to hell, through the future rounds, right?
Yeah.
And then boom, you got a valuation, right? And then
exactly. To be clear, the guys were clear up front in terms of that. So we knew going into it what it was, but it was just a case of, I think for somebody, your asked question is, was there any learnings? I think be sure of what you want going into it, because, if you can't cry about it afterwards if you get something that just comes off as a bad deal,
I know.
So.
And don't be over egging ludicrous. I've done that once, and you just you don't come out of it okay.
Yeah, exactly. And it is, the valuation side of things is very difficult, because we had taken advice from people in London. We had also gone online. We've done research in terms of discounted sales and blah 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 down the road. And you apply those, and you come up with a number, and then you take that logic to somebody who maybe values things differently, and they say, well, actually, that's not how, we don't look at it like that. And that's fine. But it doesn't matter whether you're dealing with, say, the angels, or you're dealing with VCs. They'll have a framework that they use to decide whether they'll invest or not. Yep. And you either tick the boxes of that framework, which is great if you do. And if you don't, they'll just pass. And it's funny, every time you get a no, it hurts, because you're so convinced what you've got. But you've got to take on board that, these guys are successful. The reason they have money to invest is because they're successful. So you got to be humble enough to say, they understand what they're doing as well. So, there is learnings and all of that for every time you pitch. You need to understand. Sometimes you do come across someone who's just, time waster. But most of the time, they're decent people who are just, they're very, very sensible in their investments, and they're very careful. So they have a framework that you need to be able to understand before you move on. And then you want to know, do you want them with you as well on the journey? Because this is a long journey as well, Pete. So, it's not just any investor. It's not just about money. It's also about, what do they bring? Do they have experience? As I said, I had a mentor who he was able to pull me aside and say this, and they were really important points for me doing what I was doing. So there was more than just the money. It's if you have someone, they're going to most likely take a board seat. Can you work with them? Are they going to beat you to death? Are they going to make you work? Or are they going to take up all your time when you should be focused on your business? How can you communicate with these guys or ladies or whoever it is? It's just, you need to be sure of all of that before you commit to taking something. It's a long journey. And it comes back to the team. The board member is as important as the person who's working with you on the ground. So, it's all that. So that would be my takeaway from all of this.
Absolutely. It's all about the long-term relationships with those that are investing in you and those that are not. Because those that are not, that you did like and you did get along with, but your business wasn't right for them at the stage that they invest, they may be right for you at the next stage, right? Yeah. And so, keeping those folks in your network and keeping them close and finding a way to do that is important. Looking ahead, looking at the end of 2021, what would you say Aptimyz looks like as a successful business in 3 words or less?
Oh, 3 words or less. Wow. There's so many of them. You could say deliver customer value. That if we do that, we will end up with the success we're looking for.
I like that.
Again, it has to come back to the customer. I've always said this when I'm talking with our merchants and customers and retailers. It's the thing that does the thing. It's not about Aptimyz having shiny buttons, but it's about creating the efficiencies that they use Aptimyz to do something else. And that thing creates the efficiencies in the business, and it helps them run. So, deliver customer value. That's a huge challenge. That's not that's 3 simple words, but it isn't easy.
And it feels like at the corporate level that I was in for 20 plus years, when you say that, nobody really knows what it means. You need to be in the startup coal face of it to really understand if you are
Yeah.
solving a problem.
Yes.
And it is a problem that is frequent. It is a problem that it is intense, and that it is something where someone is willing to pay for you to ease their pain.
Absolutely. Yeah.
Cool.
And a great example of that was with QuickBooks. QuickBooks, I heard, I think she was the former CEO of QuickBooks. I might get the position wrong, but she was saying about they had gone and, built a product. They'd asked customers what's the next thing you want us to put in the system. And they were like, oh, this would be handy. This would be nice. So they got collective and they built the problem. They didn't ask, does it actually solve a pain point? They just built a feature.
Yeah.
And they built the feature, went through engineering testing, beta, and then they launched it. And there was zero take up.
I know.
And this is a company that, like, at that stage was strong and was growing. And then she said they went back out, talked to the customer, said, we did this, what's your daily problem? So they asked the question then, what's the daily fault? What's the problem? And it was cash flow. How do I pay the bills? How do I pay my staff? How do I keep the lights on? So they built a cash flow feature, and that was the start of QuickBooks success.
There we go.
It's being focused on the customers, what value are we giving to that customer on a daily basis?
Yep. I've been in situations before. If I had only asked a customer what they wanted before we started building 15 years ago, it would have been a much different place.
Absolutely.
Final question. Tell us one thing that people wouldn't expect to know about David Soden.
That's a difficult question.
I got asked this question recently.
Yeah, that's a really difficult question, because at the end of the day, we spend so much time projecting that we never actually stopped we want, it's a very difficult question to answer. So one thing about David Soden that people don't realize, they wouldn't know. I'm quite a reflective person.
Okay.
I'm very reflective.
Opposite of projective is reflective, right?
Yeah, I know. But I would be a very reflective person. I would spend, if something's an example, if I went and met a customer and they talked about something, it tends not to just leave. I would think about it for a while. I would try and get my head around, try and understand from their perspective, or again, if I was, I'm a father, so I've got kids, and the challenge of being a parent, you can't just, you've got these amazing people in your life that need support, and you don't always just have the answer at hand. You need to sometimes go in. I find, reflection for me is something that, it served me well. You have your gut instinct on something, but sometimes you do need to just stop, pause, and reflect.
Yeah, absolutely. Being present, being mindful.
Yeah.
Just paying attention to the world around you and putting that phone down, right?
Well, 100%. Yeah. And
I'm with you.
Yeah, it's in the moment. And I think that's a real challenge right now, because, everybody's going at 1,000,000 miles an hour trying to just catch up with what the changes we've all been in. So, sometimes it just takes that time. So if you're driving from Dublin to Cork on a trip, it's great just to be in the car and just switch off and actually, try and clear things out in your head. Which, you don't get much time to do these days, which is great.
Yeah, I'm with you. I got to do more of that. Got to get on another cross-country trip to Galway, which the beauty of Ireland is that it's 2 hours rather than 2 weeks to travel across the U.S. Right?
Yeah, absolutely.
All right.
Absolutely.
Well, David, thank you so much. This has been such a delightful conversation. I did get a lot out of it. You've enlightened me, and I'm really looking forward to seeing Aptimyz just kill it. So thank you.
Well, thank you for your time as well, Pete. It's been a pleasure to be on the show, and a big fan.
Thank you. Talk soon. That does it for this week, folks, and thanks to David for opening up his mind to help us figure out why he does what he does. Links and show notes for this episode are on moneyneversleeps.ie, so check us out online. Also, you can subscribe to our Money Never Sleeps newsletter at moneyneversleeps.substack.com. If you're enjoying Money Never Sleeps and want to see it continue, make sure you hop on over to Apple Podcasts and give us a 5-star review. And don't forget Conan Brophy from Create Sound. He mixes and edits each episode for us and is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I help startups get their products to market, get customers, and finance their vision. You can find me on LinkedIn, Twitter, or at norioventures.com. And you can follow Owen Fitzgerald on Twitter at OwenFitzgerald9. Finally, till next time, thanks for listening. See ya.
Money never sleeps, pal.